G'day and welcome to the OnChain podcast. Don here with you. Our guest today is Matthias Wyss, CEO of Margarita Finance. Having started his career on the London commodity trading floors, we're keen to talk with him about the challenges of combining smart contracts, oracles, and blockchain to deliver more accessible and cost-efficient structured investment products. Powered by Obligate, a leader in on-chain capital markets, and built on Solana, Margarita Finance is reimagining financial instruments on-chain. Super interesting conversation. Let's dive in. Tell us about your origin story. How did you get into or transition into working in Web3?
Yeah, absolutely. So I started out my career at an investment bank in London, trading options and derivatives, but soon found out that I'm actually not going to last long in a big corporate organization, that I want to build things myself, build companies. And I did an MBA at the University of Oxford in 2013, and first actually came in touch with Bitcoin back then. I met Mike Novogratz and the Winklevoss brothers at Oxford Union Talk, and they talked about Bitcoin and Bitcoin ETFs back in 2013, which was quite ahead of the curve. And so I started looking into the topic a bit more deeply. And with my financial mathematics background, I actually wrote a paper, a thesis, my master's thesis there, on creating a derivatives markets for cryptocurrencies in about 2014, and also started looking into like a startup idea for that with a friend, John Levin, who ended up founding Chainalysis. So he was the founder. He went off to New York, and we literally realized way too early for crypto derivatives in 2014. Everyone was like, "Are you out of your mind? Doing very risky financial product on the most risky financial assets that we've ever seen, like Bitcoin." And so I didn't really, I went then into a fintech company where, building a B2B SaaS business over the following 5 years, and following crypto from the sidelines, started actually investing only in 2016. In hindsight, still early enough, but didn't touch it as an investor earlier. And then, sort of in 2021, I had my first full-time opportunity in a Web3 company. Very exciting. Decided, okay, this is the moment to go. It was a great opportunity, and this led then over a couple steps to the journey where we're on right now, actually realizing a dream that I had for the last 12, 13 years to build cryptocurrency derivatives fully on chain.
Thinking back to that 2016 moment when you've been hovering around Bitcoin or blockchain earlier, what was it that made you pull a trigger from an investment perspective?
I guess I cannot lie that it was an exciting time to be around crypto in 2016 with all the ICOs, right? And then sort of, I think IOTA was one of the first ICOs I participated in, 10x or 20x in like, couple days. And I first bought Bitcoin, I think at 1,500 or so. Then that went quickly up to like 10K, I think in 2016, 17, I think it was. So it was just like a rewarding time to be in that market. But I was like always like with not subset. Like I wasn't one of. I had friends who put in 100% of their savings into Bitcoin, right? Which in hindsight paid off really well. But I come from a risk management perspective, so I'm Swiss, so I tend to be a bit more conservative about things. But with sort of the spare cash that I had, I did play around a little bit with that, and it paid off. Yeah.
How did you know it was time? And you had that dream for 12, 14 years. How did you know it was time when it was time?
Look, I think it's a good question. I think for me, the key step was going from, trading around this a little bit, following like with some skin in the game with my money, to actually putting all of my time into, a Web3 project. I think that was actually a big step. But that was around an exciting opportunity in 2021 where my former CTO of the fintech I was working at had built like a virtual reality engine early on for like virtual collaboration, and then started going into like building a decentralized metaverse. And that was sort of like, wow, this is like fintech, this is crypto, and this is sort of VR technology. So 3 emerging technologies going together. And he asked me to join him as his CEO. And I remember telling my wife, well, I could be doing like more, well-paid mandates for private banks in Switzerland, or I could just do something really crazy and exciting, and it will potentially be something, be nothing, but like could be very exciting. And it was sort of, even though I just had my first child back then, it was a good decision to say, okay, let's just take some risk here, and also put my full-time commitment to such a role in Web3. And it was like an executive MBA in sort of running a Web3 company, because we did like the full month in terms of like a land sale, a token listing, etc., etc., etc. So and scaling very quickly. So that was a very exciting time to be around Web3.
Yeah, man. What was that project? Metaverse.
It was called Pax World, and it was the first Swiss decentralized metaverse. We grew out of it in the end a venture builder that I continued with a partner, and we then started working with a lot of Web3 ventures in their scaling path inside and outside of metaverse businesses. And that's sort of how I then met the current co-founders at Margarita Finance, working with them on what they first built is like the underlying infrastructure, like a capital market infrastructure for financial products on the blockchain. So on-chain capital market infrastructure is the core what Margarita Finance is built on, and Margarita Finance is a great consumer use case. I'll tell you a little bit more later on, but it's basically enabling you to issue real financial securities, Wall Street type financial products as a token on chain. And we're leveraging the Swiss Distributed Ledger Technologies Act, so the legal framework in Switzerland around it, that has actually been quite favorable for Web3 for about 4 years now, where things that Trump, the SEC, and Larry Fink are talking about now, right? Democratizing stocks, equities, bonds, etc., has been possible for the last 4 years already in Switzerland, right? You can actually issue a bond or a security as a token on the blockchain, and it doesn't need to have a paper-based equivalent anymore.
So you had a positive regulatory environment where you were. You met a group of people who were doing something that really excited you. How did that then become Margarita Finance as it is now?
So I guess it's also like the topic with Margarita Finance. It's again, it goes back to what I started looking at when I started my career in derivatives, right? And then started looking at first time crypto and derivatives in 2013 at my time at Oxford. So, and then running like a platform which I had then gained experience in my first Web3 project, right, was sort of the combination where we said, okay, look, this is the moment to build a consumer application. And our developers played around about a year ago with the new Solana token extensions, which were then, the next generation of smart contracts, right? And it turned out that they are very well suited for more complex financial payoffs, such as options, etc., to natively represent them. And it was immediately a prize as the best DApp on Solana a year ago, and a grant by the Solana Foundation to bring this as a fully production main chain product life. And that's what we took the opportunity last summer to really think really hard about who's the right target audience. Well, as our underlying on-chain capital markets infrastructure is really geared towards B2B institutions, we realize actually this allows to do, for example, very exciting yield products with option components, and yield is something DeFi investors understand really well, right? Yep. So let's build a product for DeFi investors where they can customize any yield they want, engineer any payoff they want, and issue this under this favorable legal framework in Switzerland as actual financial securities, which live exclusively on the blockchain.
That's pretty awesome. And I do want to get into the kinds of products that you're looking at. You mentioned Solana, obviously, and Solana has, when it burst onto the scene, I remember even in like they were doing that. Not AngelList, what is it? The CoinList, ICO back in the day, and people are like, wow, this is amazing. Yeah. And TPS was really big back in the day, and NFTs started launching on there, and then meme coins exploded. on Solana, and Solana kind of got the reputation of things are happening at Solana, and then along the way, it perhaps in some circles, got the reputation of, it's really good for memes. The serious business happens over here on these serious chains. Solana is, over there, doing its fun stuff. Solana's the kind of the fun entrant, but the real business is over here. Yeah. How did you think about maybe the part of the reputation, or was it purely the technological offering of Solana that made you go, yeah, we can build this here?
So I think there's a couple things to unpack here. So one thing is what you said is sort of like, this is the fun chain, whereas the serious business is happening somewhere else. Like if you abstract away from that, actually, no. It's a very valid point that Solana is known for, like, pumping out meme coins on pump.fund, right? Tens of thousands of them. But this actually showed us the scalability of that platform to really create a large number of tokens, but not for a meme coin application, but for actually securities, like on-chain securities type of application at scale, right? So what we offer is really from $100, you can create your own financial security. You can launch a token, which is your own security, tailored to your own investment preferences. So as always in crypto, things start sort of on the degen end of things, right? But they showed us, well, that tech is actually ready to pump out these large numbers of mass customized products, right? Financial products. So tick the box there. Then the second thing, the fact that it's a fund chain, I think is a good thing, because actually, we need to bridge that gap between, let's say, TradFi and DeFi. And DeFi is still predominantly people who are degens and want to have fun and like experience and make money, right? And also take high risk. But we're not getting sort of that large consumer adoption yet, because there's not enough like risk managed products around there. And that's what we're really trying to bridge here, right? So our product fills the gap between, very boring single digit staking yields and the really crazy degen risk farming strategies. You can really engineer any payoff between 10 and 50 or 60%, right? That's sort of like, that's the APYs we offer. And we show you transparently what kind of risks you need to take to achieve that, and what it means, right? You might miss on the upside. Let's say if you are a cover call strategy, which you call a crypto booster, you're basically getting a 30% juicy yield. But if it goes really through the roof, you're basically not participating in that. So you have it at risk, but it's sort of limited, right? Because it's like opportunity cost that you give away and things like that. So you might want to do that with part of your portfolio. So coming back to Solana, scalability, key issue. We managed to get the scale there. Then second thing is that it's full of DeFi people is actually a good thing, because that lets us bridge that gap more easily. And then I think that's what DeFi really needs now, is serious financial use cases, serious investing use cases on these scalable platforms. And that's sort of why we also chose a fun project name like Margarita Finance. You can customize your own product like a margarita on 100 different flavors, exactly according to your risk appetite, right? So it needs to be a bit of both. It needs to be a bit of the fun element to attract the users, but at the same time, we offer a very serious, fully regulated financial product on that platform, which offer Wall Street type of investment yields.
Right. So where other people might have looked at Solana and seen meme coins and it's not serious, you looked at it and saw, this is actually where our target audience is, and the proof of concept is there in the proliferation of all these memes.
I would say so. Regarding target audiences, it should start there, right? But our target audience is more the normies out there, right? Yes. Like we want to get real, regular people into DeFi, because we believe DeFi today doesn't have a lot of attractive things to offer to the normies out there. Because if you want to get 5% yield, you just go to your, Schwab account or Robinhood account and get a money market fund, right? Like, why would you put it into Ethereum staking, right? I mean, if you're just a normal person, you're not familiar with all of these networks and protocols, doesn't mean much to you staking yields of 5%, right? You just keep it on your bank account or in a money market fund. On the other hand, many of these people also don't want to like invest something which can 10x or be worth nothing tomorrow, right? So they need something a bit more risk managed. But if they can get sort of 10, 15, 20% yield, get a good risk return payoff, and maybe sell a bit of their upside, why not, right?
Mm-hmm. Yeah, man. So can you tell us, what is Obligate? And tell us a little bit about how it powers Margarita.
Exactly. So Obligate, when I talked about this on-chain capital markets infrastructure, that's Obligate. Obligate built an infrastructure which allows you to issue financial securities, so bonds, structured products, etc., as a token on the blockchain, leveraging the favorable Swiss DLT framework. So it's a blockchain plus legal tech infrastructure. And we now developed a new project on top of this, which we call Margarita Finance, which allows for the application of this technology into a consumer DeFi use case, and that is Margarita Finance. Margarita Finance is an AI-enabled DeFi platform that allows you to engineer really any API you want and create your own financial securities and your own tokens on the blockchain.
So how do you said before that the people who are in, the degen folk who are already around Solana, they might not be the target audience necessarily, but they're already doing it, and they are primed basically to take advantage of what you're offering. But you really want to go broader to bring in regular everyday people. How do you sell that to people who might be suspicious of blockchain, or how do you? I mean, even materially, how are you onboarding people into this ecosystem?
Yes. So we have two use cases, two distribution models. So one is our B2C platform, Margarita Finance, which again is tailored to people who are already in decentralized finance, who talk that language, right? Who understand the main concepts, and we onboard them through classic, like we have a Telegram channel, we have our social media, we engage people, we do PR, etc. Right? That's sort of the classic community building aspect of it. And then this infrastructure that we built with Margarita Finance is also available as a protocol to be deployed into other distribution platforms. So we work with regulated banks, for example, here in Switzerland, crypto banks that want to have this type of financial products offered to their clients. And because it is fully, regulated, it is fully according to the Swiss legal framework, it's very easily plugged in as sort of their own white label version of this product as well. So we can actually reach a broader mass by allowing other platforms, marketplaces, crypto exchanges eventually as well, but even Web2 platforms like the Robinhoods and the Revoluts as well, to leverage this technology to allow a better product offering for their users.
Yeah, and I imagine that because you're talking about, maybe it's the kind of black box of DeFi being not necessarily, or based in jurisdictions that perhaps aren't as well understood, or don't have, particularly, the reputation might not be great. That might actually dissuade some people from participating. But because you are in a very well-respected jurisdiction and doing things in a regulated kind of way, that's very different to maybe the DeFi of 2021, perhaps you might say. Finding that, is that a barrier? Is there any pushback from the decentralized folks saying, we need true unregulated DeFi, or are people excited by the fact that, this is actually legitimizing DeFi?
Honestly, I think it's just the reality of where the market is going. For me, blockchain is a technology. It's an exciting technology which enables for democratization of many, many use cases, like get access to capital, get access to exciting investment opportunities in very fractionalized units, right? That's one use case, right, that we've been exploring with decentralized finance. It doesn't mean that it has to be absolutely outside of the law, right? For me, I'm not like, tribal about, this has to be now, a new society and everything new built. No, it's a tech, right? It's a tech, and it can coexist with the current legal frameworks, right? Maybe they need to, actually this DLT Act in Switzerland wasn't actually a big deal from a legal point of view. Basically, we've had paper-based securities. We've had digital securities since the advent of the internet, and now these digital securities run, rather than at a centralized server at the Swiss exchange, they run on the decentralized blockchain as a ledger. It's not actually a big deal. It was a small change to law. There's a new technology. Let's adopt it, right? So Switzerland was quite proactive on this. And that's actually the same way I see it. It's a great technology. Let's use them for many, many use cases. But it's not like we're going to turn the whole world structure, world order upside down with that tech, right? We can live within the current legal framework. And that's what I believe already offers a massive advantage to many, many people out there.
Yeah. Are there any other jurisdictions, do you think, that are doing it well? I mean, you recently went to the Digital Assets Summit, and you would have met some people from all different kind of, geographically all around the world. And where else do you think is doing it well? Or at least on the right track?
So, yeah, exactly. So I would say sort of the forerunners on this were definitely also Luxembourg, Singapore, and Liechtenstein to some degree. So these, when we looked at where can we do this, right? I mean, yes, I am Swiss, but we looked at it from a very objective lens in terms of like, what are favorable jurisdictions where we can run this? And actually another founder that I know who set up a very successful ETF business 6 years ago, 21 shares, they also looked at this globally. They looked at 30 jurisdictions in 2018 and said, hey, where can we do crypto ETFs? And they eventually chose Switzerland as the best jurisdictions out of their analysis of 30 jurisdictions, right? And they have no ties to Switzerland, right? So objectively, it's a good legal framework, but luckily, it's the let's say global scale of regulatory changes is advancing as well. So of course, we have now a lot of changes in the US with the current administration. So I think from a pure, let's say, blockchain crypto angle, it will become more favorable, as we've already seen it with the SEC dropping a lot of these lawsuits that have hindered a lot of players in the past of innovating. Some of the largest players in crypto, US-based ones, were extremely conservative for any new innovation, right? Because they were just probably rightly so scared that so the SEC will come after them, right? And also us, we've always exempted, or like we didn't onboard any US investors, and that might change at some point soon, right? So that's great. I think that's overall great. And arguably the US is a leader in many things, so hopefully that will also lead other countries to then adopt the necessary regulatory changes to allow for things that have technically been possible now for 10 years or so. So it's just about the law to keep pace with that.
Amen. Any other learnings from the summit, or things that got you excited or frustrated?
Yes. No, I think it was a very good summit. I mean, being hosted in New York City, the sort of financial capital of the world, having such a summit with, Trump dialing in for a speech as well from the White House was exciting. It was exciting to see all the big institutions being present, but also real, serious financial adoption of this technology. And I would consider ourselves on that end as well, right? Yeah. I mean, I love, the DJs out there and, speculating on money, but in the end, you only get that bigger adoption if all the serious institutional players come in as well. And, we've met many, investment funds as well that are looking for things that we built, right? Because they say, well, we would love to invest more on chain, but there's just not enough good quality things, investment opportunities out there yet. And that's why they love what we're building, because it sort of starts filling a gap that they were looking for.
Yeah. So is this the beginning, or not, maybe not beginning, but is this where the scales really tip and TradFi capital markets truly come on chain?
I think it's definitely the beginning, yes. And look, for the last 2 years while we've been doing this, I've talked to all the big institutions in TradFi, and all of them are convinced that capital markets will be on chain next 5 to 10 years, right? It's just the path to get there is uncertain, but literally everyone from the Goldman, JP Morgans, and all the investment banks of the world to the clearing houses, the DTCCs of the world, to eventually the custody banks like the State Streets of the world, to eventually the asset managers like BlackRock. Larry Fink has also done a bit of a U-turn on crypto and tokenization, right? Like he told everyone in Davos, he believes, soon enough, all stocks and bonds will be tokenized and available to everyone in the world, right? So I think that's been happening since early 2024, with two things happening in the institutional side. So of course, institutions like BlackRock, etc., and Franklin Templeton, basically two sides. So Franklin Templeton, BlackRock, building TradFi products, so money market funds for the DeFi worlds. So making TradFi products accessible to the DeFi world. But then, of course, all the crypto ETFs making crypto accessible to the TradFi world. So we've had that conversion starting in 2024, but I'm very convinced that 25 will be even bigger in that sense.
Is that about like duplicating TradFi on-chain and then bringing them over to a superior technology? This is about building new rails and like revolutionizing TradFi.
Yeah, I think that it is a very good question. So what's happening here mostly right now is building the bridge and sort of duplicating it, right? That's what I call tokenization, where you see tokenized money market funds, right? You see potentially tokenized Tesla stocks, right, at some point. So the two will probably coexist for a while. However, what I'm much more excited about is, of course, what the applications that we're using. We're actually creating absolutely fundamentally new rails for these securities to solely live on this new technology, on the blockchain technology, and that actually creates like 80% of the efficiencies, right? So if you issue a bond on a blockchain, but then you need to settle the payment by a wire transfer globally that takes like 5 days, it's kind of like half the fun, right? If you can issue security like you can on Margarita Finance and settle it within a second from your Solana wallet in USDC, that's when it gets exciting, right? And you can trade 24/7, and you don't have any of these really ancient financial rails that we're running on still. You get rid of them. Yes.
Yeah, man. Even the fact that markets aren't open 24/7. We're in 2025, right? Even the fact that
Exactly.
markets still
Top level.
9 to 5 or worse in some jurisdictions is I can't.
We have AI agents running companies, right? And we have rockets flying to the outer space and landing back again.
Yeah.
But we have 9 to 5 markets, 5 days a week.
Yeah, man. Can you speak
Hard to believe.
more to the kinds of things, these new rails you're talking about? What are some of these things you're very excited about?
Yeah, look, I think it's really not fundamentally completely new technology, but one thing I'm quite excited about is the convergence of certain technologies, right? So AI is abundant, is everywhere, right? But of course now if you AI built on like ancient financial rails is only half the fun, right? Because you have all of these AI powers, superpowers, right? But then you have to wait 5 days for your money to settle if I send money to Australia, right? It's kind of half the fun. AI on crypto rails, that's when it gets super excited, right? And that's what we've just launched now with Margarita Finance as well, where you can basically, in a very easy way, just to talk to your AI bartender, tell them sort of like, what are you looking for in terms of financial products? Does the rest for you, creates a financial product tailored to your personal preferences, and it's immediately tradable, T+0, right? And issued into your Solana wallet. So that's sort of the combinations of or convergence of these technologies that I'm very excited about.
Yeah, man, that's awesome, actually. And stuff you couldn't, like, you couldn't do that 5 years ago. That's amazing.
No, impossible.
In what other kinds of ways, since you brought up AI, how has that changed how you're thinking about building Margarita Finance? Is it mostly to do with the kinds of products or composability? Is it to do with the actual how you are building or how you're thinking about and building in the future or verticals? How are you thinking about it?
No, it's really two layers. We're thinking very hard of like how to build this as an AI first company, right? So first is the consumer layer, right? Like the interaction layer, which of course financial advice historically has been very human intense, right? But the human element in terms of, you know, conversational AI and voice to text, voice to speech to speech type of AI is, you know, we're getting there. It's almost as good. Like, it's almost indistinguishable, right? Whether you have a human or not, right? In many use cases, right? Whether it be a call center when you call up, I don't know, your insurance dealer, or whether it's financial advice, right? Of course, financial advice is much more regulated, right? We have to consider that. But still, that's one element. So the consumer interaction, like how do you consume these products, right, is one layer where we now, you know, launch this first conversational AI that can, you know, create custom-made financial products for you. Whereas the other layer is, of course, where is this going long term, right? Who's actually our target investor on our platform? Is it B2C? Is it B2B? Or is it actually B2A? AI agent, right? So actually, we've built the first rails, right? You know, I'm sure you've seen all the fun happening around DAOs.fun and AI agents sort of, you know, trading meme coins. This again is just the beginning, right? Again, in crypto, normally the innovation starts on the DJing end, but I am certain, positive that, you know, a couple of years down the line, we'll have AI money managers, right? Independently executing reasoning, executing strategy, not just execution, right? It's really the reasoning, the sort of the whole process of the investment process will be fully run by a set of AI agents. So how do we make sure Margarita Finance is at the forefront of this and available, accessible by AI agents? And AI agents love DeFi. Why? Because try to, you know, run through a KYC at, you know, a big bank as an AI agent. It's kind of harder, right? To prove that you're human, right? I'm not saying impossible, right? Nothing's impossible with AI, but it's harder. And so that's why I think, you know, eventually DeFi will be the first playground for investment agents, agentic investment protocols. And we actually already built the first rail for AI agents to connect to Margarita Finance and trade our products. So we've gone live with that in February already.
Is that more than just an API? How does that actually, how is that bespoke to agents specifically?
Yeah, so it's, you give them the ability to even like sign transactions, right? So normally that's like a click, like sort of like, yeah, it has a feature of a similarity to an API, but it actually makes sure that they can actually connect and actually fully sign transactions as well, which you can do well with wallet transactions, right? You don't need a human signature, right?
Yeah.
And execute and also reason, right? Come up with strategies around how to implement it. So we've actually built our first in-house one that now connects to our products and gives updates, trading updates to a Twitter channel.
Man, that's actually awesome. I've not heard anybody mention B2A before. It's always B2B or B2C, or, you know, B2B2C or whatever. At the end of the day, you know, you're trying to connect with the customers. And I guess I've always thought about it as the agents are operating on behalf of the customers. And so obviously it's still B2C, but you're making it agent first, which I find, you're blowing my mind. That's amazing, actually, the different kinds of, like just thinking about it that way, rather than B2C who has an agent, you're making it for the agent acting on behalf of the consumer. It's amazing. That's awesome.
Exactly.
Are there any other?
Eventually we'll go there.
Well, of course, because eventually that's how all business is going to be done, through agents, and even agent to agent, or multiple agents to multiple agents.
Yep.
How else is that agent first thinking or agent first philosophy? How is that impacting your thinking around your offerings or products that you're building, or again, even just the way that you're building the whole company?
Yeah. So one thing that is very clear on our roadmap is, so we started now with, you know, this very scalable infrastructure to issue financial products on the blockchain, right? You can create your own financial product starting at $100. This we started with a DeFi angle to create yield products on cryptocurrency. So you can get a yield on BTC, for example, which so far has been hard for non-institutional investors to get access to yield on BTC, right? You could build your own product yielding 20% on Bitcoin, right? So that's where we say the immediate initial use cases. But of course, the tech allows you to build the same kind of products on an Nvidia stock or on the S&P 500 or on oil or on inflation, right? So the underlying reference asset of that option doesn't need to be a cryptocurrency, right? It could be anything else, right? So actually, and with the fully regulated infrastructure that we have, that's actually possible. You don't even need like any, complex tokenization mechanism, etc. It's just a market maker like Galaxy, etc. that quotes something on non-crypto underlyings, right? And we make that accessible to non-institutional investors, but like to the broader mass. So if you then put this into context with AI agents, which love DeFi because they're not humans, right? That is actually a unique funnel to give them access to traditional assets as well, right? So then they can actually get exposure to equities, bonds, currencies, commodities outside of crypto. So that's sort of where we see the market going, not just for investors, but also for B2C, but also for the B2A angle, that we have a unique funnel to give them access to very traditional type of assets.
So this seems really awesome, right? So why aren't people rushing into it? Is it just a matter of time? Is it just we just keep putting the word out there and people will see the benefit and they'll come in? Or are there roadblocks?
I think it's just they're being unblocked as we speak, right? So that's a great thing from a regulatory point of view, but also from a market adoption point of view. So we went live with our alpha version at the end of last year, right? We've been around now for 3 months, right? We're just about to raise our seed round now, or we're closing our seed round, so that's great. And we, of course, we've done our viral marketing so far, but we of course need to get the word out about these cool solutions out there as well. And yes, I think it's just going to be a no-brainer. I mean, it seems like you're interested, so absolutely, I think it's a big market out there.
Well, like I wasn't as early, I wasn't around blockchain as early as you, but pretty early enough that, even back in 2016, 17, people were talking about, this is going to be the future. And we've been waiting for that kind of future to realize or materialize, not passively, like we've been trying to build it, right? But it's been a little bit elusive, either from a regulatory thing or for just the market cycles or the technology catching up. And obviously, with AI really proliferating over the last 2 or so years, it seems to have changed the game in many aspects in terms of just products that we can output and things that we can build and the kinds of things that we can build as well. And so I'm actually genuinely excited that this might be the year that DeFi or that blockchain. I mean, I think it's proven itself with Bitcoin and with stables. I think it's proven itself at a macro level, but I think when DeFi really hits the meta or hits the normies, I think that's when it's really going to prove itself. And so what excites me is hearing the things that you're building and going, oh yeah, I think this is actually the kind of thing that we've been waiting for or we've been trying to build or is fulfilling part of the promise of blockchain that we've been talking about for a decade.
Exactly. And if you think about it, the analogy with AI is very good because I started, looking into machine learning algorithms probably around the same time, like 2013, 14, 15, right? And that's what was called big data analysis. And it's taken about 10 years, a good 10 years for actual useful use cases to come out, right? Till I guess ChatGPT version 2 or so, or version 3, which was like already like quite a mind blower, right? So that was only, 10 years later, right? And then you look at the ICO bubble boom in 2016, where everyone was saying, well, now all financial assets go on chain. And we're about 9 years later now. So yes, from the analogies, probably this and next year will be the year where this actually goes mass adoption the same way ChatGPT went.
Are there any events or what do you fear happening that could stop it? Is there anything that can stop it, do you think? Or other than
I guess
everyone
the whole,
in?
yeah, the industry is very good at shooting itself in its own foot every once in a while by another FTX or a Bybit attack or things like that, right? So I think that's just a trust element. That's the funny thing about building a trustless system. You still need people to trust it, right? So that the tech actually works, and it's basically that's just then sentiment, right? So even those things like they're not fundamentally disproving the value of the tech, right? They're just like building a bad sentiment around how people trust these technologies. So I think yes, probably another big hack, a big setback, a big rock pull, things like that, right? It's just eroding trust, right? And I think that's probably it's more on the sentiment side rather than on the regulatory or tech side that would really change things. Yeah.
Okay. And you've spoken about this a little bit already, but is there anything else that you're particularly excited about for 2025?
Yeah, look, for me, I mean, when I just, being in New York really opened up my eyes again that, really so many different, very, established institutions, but also, DeFi projects that have reached sort of institutional scale are building the things that are now really needed. So real financial applications. And I think that's what I'm really excited about to see. Hey, look, amongst, and we don't need to hide, Swiss people tend to be like quite conservative, but we're really amongst the best out there, building the best products for us. And so maybe that's what I'm mostly excited about. Yes.
Yeah, man, that's cool. One of the questions we love to ask is, do you have any particularly contrarian views, or do you have something that you hold to be true that you find most people disagree with you on, or what conventional wisdom are you thinking the opposite way that we might be able to learn from?
So maybe, as I said at the outset, I'm not too tribal about blockchains or specific chains or specific cryptocurrencies, right? I think they're good, exciting applications of the tech use case, but I don't think, maybe I'm contrarian to like the proper DeFi people, in the sense that I don't believe this is going to completely replace our financial system, or the fact that we're going to have currencies, etc. So like Bitcoin as a store of value, yeah, maybe, but like as a transactional currency, probably not, right? So I'm not really a big believer that this completely just changes the world order, right? But I think this is a very useful technology to help a lot of people get financial freedom and get access to financial products, democratize access to payment rails, etc. That they would have, for certain, sending money abroad use cases to emerging markets, paid hefty fees for, which are now efficiently possible with stables, right? So this is already, we see these democratizing features already. So I'm not too tribal about it, but I'm a big believer that the tech in the end helps people in the end, and makes the world better.
Yeah, man. So if someone wants to find out more about Margarita Finance or hear more from you, where can they find you online?
So it's just margarita.finance. Check out our website. You can play around with the app, get some trades done, and then you follow us on Twitter on markfinance x.com/markfinance. That's where you can stay tuned to join our Telegram channel.
Awesome, man. Anything you'd like to say to someone who maybe, 'cause we've got a lot of people who are either founders or in fintech generally, and maybe not around crypto blockchain. If someone's thinking, "Oh, okay, this sounds accessible to me," any encouragement you'd say to someone who hasn't ever, got into DeFi before, or even bought a Bitcoin?
Yeah, look, that's exactly the type of people we're targeting, right? We're really targeting the normies out there who just want to get good investment opportunities very easily, 24/7 accessible. So don't even worry about the underlying, financial infrastructure being now on crypto rails. We really hope we're doing quite a good job on like making this accessible for everyone without any previous know-how, right? So the only thing you need currently is a wallet, like a Phantom wallet or a Coinbase wallet. But even that, we're going to abstract away in the future as well, make it much simpler. So yeah, that's basically what we need out there. It's having this tech as just a new way to open up possibilities without creating additional hurdles on top. And I think that's what we're trying to bring to the people.
Good on you. Thank you so much for joining us today. Hope to have you back on the show maybe in a few months. Let us know how you went with your fees and the rollout of your products and launch and stuff. And thanks again for joining us.
Awesome. Pleasure, Dom. Thanks a lot. Thanks for having me.
Thank you for joining us today. We hope you enjoyed this episode of Off-Chain. We love bringing you great guests like Matthias. Hope we've inspired you to learn more about Web3, about finance, about technology, about the future, and how you might be involved in building it. As always, please like, subscribe, or better yet, share this episode with a friend and help us spread the word. And join us again next week for another great episode of Off-Chain. Till then, take care.